Volatility seems to be for those that want to play it quite bravely in a sense. Would you say that the volatility that the market has been offering that has also offered quite a bit of opportunity for those that want to trade in the currency market?
Thank you. Good afternoon. Look, obviously the volatility has an impact. Clearly, as John was referring to as well, there's been a lot of volatility coming through in the market. So your retail market participants, they don't really worry about volatility. They're just taking a punt on whether the rand's going to weaken or strengthen against the major currencies. And then obviously second to that is you've got your pension funds, life companies and asset managers who are trying to hedge any risk that they might have offshore, but using local rands to hedge that component of it.
Well, it's quite fascinating, as I mentioned, that relative to what we saw last year in 2010, the derivatives market is increasing quite substantially. Give us an indication of what kind of scenario are you expecting into next year?
Well, I mean, when we say substantially, it's increased by 100%, so it's quite a great growth from our point of view. It's very difficult to comment on what next year will forehold. Obviously, we're hoping that we will continue in the same vein. I doubt we will double and grow at 100% again. But as long as the volatility continues to move around and haphazardly like it has done over the past 4 or 5 months, then that is a good indication from the JSE's point of view that more people will start to hedge via derivatives and using a geared instrument as opposed to using full value instruments by trading the likes of forward exchange contracts.
Well, with regards, I mean, because you're basically offering exotic currency instruments in a sense. Give us an indication of what the market looks like right now. Are most participants getting it right?
Difficult to say because obviously for every winner there's a loser. So we look at it as an exchange, the zero-sum game from our point of view. So if one person is making money, another person is losing money. So for us, we can't really see or gauge from that impact.
With regards to bringing more products onto the market, what is the status on that? Are you planning to expand this further?
Yes, obviously I can't talk too much to that, but obviously we'll have new currency pairs coming to the market next year. We're also looking at redefining our index basket, which unfortunately has got the Chinese component, which is a non-deliverable on our side, so we need to reinvestigate that. And then we do have some new attributes and some new pricing structures which we hope, like where there was an encouragement of pricing this year, next year we hope to decrease fees again, further stimulating more growth in the product.
Oh, what kind of fee structure are we looking at right now? Is it relatively expensive relative to other instruments? And also it seems that investors are able to negotiate the contract.
Well, yeah, the any day expiries, they can now choose a date. So the flexibility that the exchange has now offered allows them to hedge to a specific date. In the past, they would have had to stick to the standardized contracts, so like most contracts around the world and globally, they have standardized quarterly expiries, so we can now do a delivery for 3 days if somebody chose to. From a pricing perspective, relative price to other futures that are traded on the JSE, but like I said, and our commitment to the market has been, as long as we continue to grow and the liquidity continues to increase, we will try and obviously implement decreased fee structures to the market.
Warren, and you mentioned the pension fund industry a little earlier. Yes. We know that the pension fund industry is now allowed to allocate around 15% to exotic instruments in a sense, or at least unregulated products, hedging instruments being one of them. Have you seen a big participation by the pension fund industry?
We certainly have, and again, we can't comment as to what the cause of that has been. We know that they come in and they're the ones that put the large volumes through the market. They've certainly grown, they've got involved in the exotic structures, which is what we would have expected because they would like to move away from OTC type structures to regulated market structures where the pricing is not opaque and it's more transparent. But as to how much more they would get involved with, that again would have to wait for next year to see.
And Warren, some would also argue that the hedge fund industry is a dangerous game, especially when it comes to immense volatility, or at least during a market crash. What is your sense on these products that are offered at this point in time? Do you think that there is a bit of danger and risk being taken on?
Well, look, there's always danger to any product that one trades. But if they are using it as a geared instrument or hedging a portfolio, an underlying portfolio, well, then there's no risk. They're really mitigating any exposure to a long-term effect that they might be seeing if they leave their money fully exposed offshore. So they're really mitigating risk the way we see it.